Okay, guys, today 16th of May, I'm out once again. All right, so apology on the background, and then we're going to go into disclaimer as usual and make sure that later on in the second half, we will be doing the PTP indicators PMB. All right, so let's go to the market as I was speaking earlier. Okay, so here we go. Okay. So you can see that, right? When the market is going choppiness, so when the market is trending, all right, it should be going all the way up or all the way down. But once it become very choppy, right, there's a very high chance the market could be going to have a change of trend or an extension of trend. So this morning, when the gold, this morning you can see that the dollar is trading low, yet the gold is coming off at the same time. That could be some profit taking on the gold market. So now the thing is this, as I was mentioning earlier, when the market is moving up, it's very simple to trade. When market is coming down, it's very simple to trade. It's only when you see choppiness, whereby the market keep on swinging. Now this is part and parcel of market. Yeah, it's really part and parcel of market. So if you notice that in the group chat, I always say this: whenever someone complain or someone say that, hey KEL, today market very difficult to trade, blah blah blah. You know that I always repeat with this. Oh, good. That means that we're going to have good days coming in. You know that every time when someone say about this, that market is very difficult to trade, very choppy, very hard to make money, this is always the epicenter point whereby usually the market also trend. And I love that because it's very easy. I just follow through. But the problem is this: at the same time itself, right? People, because of that, of today's market choppiness, right, they will not trade tomorrow, and they'll miss out the trade. And then the next few days market trend, right, they will totally miss out. And then the worst thing that happen to them is that then they finally jump in again, the market hit. So this is the thing that I will teach in the PDP storage, whereby it's called the market psychology. Trader psychology, a lot of trainers in Singapore teachers like discipline, must live your life, must do your planning. That one is trader psychology. Market psychology is really, you need someone to have went through a lot of market cycle into very but into psychology of the how the market really manifests and work. This type of people like myself, we do teach that, and then we'll tell you why the market behave in such an irrational form at times. All right. So with the dollar coming down, by right, we see a gold recovery. So watch out for this, because if you look at it, if I take away this Dow chart rate away, and I put in the gold chart in, okay, you can see that that by default, yeah, by default, yeah. Let me just make it a bit clearer for you. Okay, you can see that by default, when the change my color a bit. Okay, so okay, done. So when the dollar, okay, when the dollar start to, okay, when the dollar depreciate in value, can you see that? That is where the gold rises. Can you see? You see that gold is the one in line. The candlestick is the dollar index. So by right, you can see that when the dollar index was rising, that's why gold was coming down. So by right now, the dollar is coming down. Gold should be going up, but it's a bit stalled right now. Okay. So I think that there's a lot of baggage now on gold, but eventuality is that when the dollar continue to drop, gold will go back up again. So this is a good time for you to make good money in the coming days. Yeah. So watch out for this big movement coming in. Okay. All right. Now yesterday the 10-year yield hit my 5.454%. Okay. 5.54%. Then it pulled back because of the PPI data. The PPI data came out better than expected because the crude oil has been coming down quite a fair bit. So that basically pushed down the inflation numbers. But at the same time, it could also be explained that there could be a stagflation, because now inflation is still there, all right, but the whole economy is not doing very well. And I've been hearing around people telling me that they are feeling the tightness in Singapore in terms of business. They feel that now business is not easy to make money and everybody is complaining. So not too sure how true is this, but this is actually happening right now. Okay, all right. So that is the global market side. Let's look at the today's market. Yeah. Okay. Wow. Okay, I can see that the Dow is coming down a little bit. Even gold is coming down. Let's take a look. Okay. So first of all, let's just go into detail. Today is an inverse pivot day. Inverse pivot means that the market will trade sideways, especially if it opens within the two pivot. Now, today's opening price is exactly what I just said. It opens between the two pivots. So the market by right, it should be moving, in this, sorry, the market should be like this sideways, for the day, because the two polarities are pulling the market at the same time. So that could be a tough market to trade if you want to look at it. But the thing is this, right now, the market is seemingly rejecting the MA200. The MA200 is being rejected. If the market can break above the MA200, then we will see 42,597 easily, yeah, because that is the key marker here. Now the KSI is green, the KCX is black, so everything looks good and positive. So the thing is this, if the market is supposed to go up, then it should go up. If it doesn't go up, right, usually the opposite will happen. So let's take note of that. Yeah, that is for the Dow itself, right? Dow have been sideways for 4-5 days after the gap up. So I cannot deny that if the market do pull back, this particular gap looks very delicious. Yeah. Okay, let's move on to the gold market right now. Okay, gold has come off. Okay, so today there's a few things on gold, and I tell you many times before that KCL is very important. Okay, yeah, and the main thing is this: the KCL is 32.36, which came from this guy. Now this guy got what, KCL again, because it's a C. This guy is a CCYR, yellow to red, and then the KSI is red. So that means that by right, the closing will become a very important technical level, and that number to use is 36.58. So that's why you see the last few days when the market cannot stay above this number, the market always come down. Pretty cool, right? Yeah, pretty cool. Now, if market recover above it, that's why it buys up, but if it stays below it, it sell down. So 36.58 is a very important level to watch today. If the market cannot stay above it, I'm so sorry. I think it'll come down to MLP, which is 32.08. So watch out for euro tomorrow. If this guy stays yellow, tomorrow there'll be a blue diamond at the bottom. There will be, because of the KCX that's here. And then tomorrow, you just draw the line at the closing price of today, then you have a buy and sell. I think, in my opinion, the euro should be able to hit 1.1277 in the near term. Right, the downside itself is quite hefty. It may go down all the way to 101, but I don't think so. Yeah, so I believe that the dollar index peeling off, the euro will benefit, and obviously you can see it's happening right now. Yeah. Okay, the last one the last one here, because I think that Iman have been very, very supportive, and not too sure he's here today. Now this is the Canadian dollar. Remember the Canadian dollar? Okay, so just now you saw the white line, right? We place it in, and you can see that the market, ever since the white line is being done, the market actually stays above the white line. But vice versa, if the market do break down below OP and become red color and break this white line, then the selling could be as low as MA30 or even worse. Okay, so take note of this Canadian dollar, yeah, everybody. All right, guys, that will be all for this morning session. Thank you for listening. We will now go for a short 1 minute break or two, and then we come back to do the PTP BNB segment. Thank you very much.